Hi, this is Jeffrey Kurt Financial Group. Today's Thursday, October 16, 2025. And today I want to do an educational financial planning video to help you think about some things for your individual situation. So we're into the fourth quarter. Before you know it, it's going to be holidays and end of the year stuff. And I don't think it's too early to think about tax saving strategies. And there are several things that are pretty simple and easy and available to most people. First, let's start with losses. If you have an asset in a non-retirement account, investment portfolio, or some other asset that it can be sold at a loss, you should do that. And I know it's hard emotionally to sell something at a loss sometimes, but losses, first of all, can offset gains if you've got gains in an investment portfolio, or just take the losses up to a $3,000 level. And that's either $3,000 in losses or offsetting gains up to a level of $3,000. You can deduct that on your 2025 taxes. Again, it's outside of a retirement account, and you have to realize that loss. Second, maximize your retirement plan. So if you're in a employer-sponsored plan, if you can do it, max out the amount going into that plan. It builds up your retirement account, plus it reduces your taxable income. So that, again, you can maximize that by, withholding maybe more, again, if you can do it without impacting your lifestyle. Secondly, if you don't have an employer plan, like a 401k, 403b type plan, if you're not participating or don't have one, IRAs are available. And we can set one up. It's pretty easy, about 10, 15 minutes of paperwork and we're done. And in there, you can deduct up to $7,000 for 2025. If you're of a certain age, you get $1,000 additional. And you could do one for yourself, for your spouse, and like that. Perhaps up to $15,000 of tax savings. Now, if you don't have the liquidity, even putting something in towards an IRA, makes sense and can then reduce your taxes. And then next would be health savings plans. I think this is a very overlooked strategy. Depending on what your group plan is set up as, and we can help you with that if you get the information to us, you can set up a health savings account and reduce your taxes by the amount you contribute to that plan. Again, it's a pretty simple process. You put the money in, you get the deduction for the amount that you can do. Single is $4,300 for 2025, $8,500 for a family. And again, over 50, you get the catch up. And then lastly, charitable contributions. If you itemize on your taxes, you can contribute, deduct charitable contributions. So if there's a cause that you're passionate about or really want to support, and you itemize, it might be something to consider doing a contribution before year end. And also, just to be aware, the charitable contribution rules are going to change for 2026. So we'll stop it there. Please call, email if you have any questions. Again, as the year comes to an end, we're going to be distracted and busy and have other demands. So it's not too early to think about these things. They're pretty simple. Won't take much time to go through them. And we're happy to help. And give us a call, email, or text. Thank you. Goodbye.